Now I'm going to talk about a number of tools that can be used to implement the farm succession plan. These are illustrative and not exhaustive, but they are commonly used tools in the process, and they certainly include conservation easements as an essential tool, since they are a component of ALE projects. These tools include agricultural conservation easements, business structure, buy-sell agreements, gifts, life insurance, trusts, and wills. Agricultural conservation easements are the tool used in ALE projects to permanently protect land. Importantly, they can facilitate farm succession by first protecting land for agricultural use. Secondly, they generate income that can be invested in the agricultural business and improve its viability. And thirdly, they can help make land more affordable for farm operators and future generations. Some of the important planning issues to consider when thinking about agricultural conservation easements in the context of a farm succession plan include land planning, which is already a critical part of the ALE project process, financial and tax planning, whether the easements are sold as an ALE or donated, business planning, the easements should support and enable continuation of the agricultural business, and estate planning. As we say at American Farmland Trust, long-term conservation and estate planning go hand in hand. Business structures for agricultural businesses can vary. No one size fits all. They can include sole proprietorships, partnerships, corporations, and LLCs, that is, limited liability companies. Though at this point, the limited liability company is far and away the most commonly used business structure. The critical aspect of the farm business structure is that it is essentially the vehicle for the transfer of the business via an operating agreement. Such an operating agreement would outline critical issues such as management and decision-making structure, ownership and control of the business and underlying assets. It may allow for separating ownership of operating assets and real estate. It also can allow for separation of management and ownership. And most importantly, it should be in writing, and you need to recognize it will likely evolve and change over time as the business changes. A critical component of an operating agreement is what's known as a buy-sell agreement. It can be either standalone or incorporated into an operating agreement. But it's critical because it creates the way to determine asset values, and it outlines the process for transferring the business, as well as providing payment for and/or financing terms for any eventual purchase of the business or business assets. The bottom line is it's a way to deal with what I call the 5 Ds. Dissolution of the business, disability of a business member, divorce among the business members, a death of one of the business members, or simply a natural disaster that impacts the business in a very draconian way. Many farm transfer situations involve gifts of assets. Gifts are a convenient way to transfer assets tax-free. It's also a way to compensate on-farm children or long-term equity partners for their sweat equity. The fact is that fair is not always equal when dividing farm assets. It can also provide asset protection from Medicaid, creditors, lawsuits, or in the case of a divorce. It's important to remember, though, that a gifting program needs to be balanced with the retiring generation's need for retirement income. Each situation is unique and should be addressed in its own unique fashion. Presently, the federal gift and estate tax exclusion is $5.45 million for 2016 for each person. The annual exclusion, assets that you can give away tax-free per person, per year, per gift, is $14,000. And the exemption for 2032A, agricultural use valuation, is $1.1 million for 2016. Another important and commonly used tool is life insurance. Essentially, life insurance is a contract that pays a cash benefit at death. It can be used to fund buy-sell agreements, a way to finance a purchase. It can be used to replace asset values if they're going to be transferred or given away. Life insurance can be used to create and fund trusts. Can also be used to create an inheritance for non-farm heirs who won't be receiving the farm. And in some cases, life insurance can be used to pay estate taxes if that's necessary. The two main categories of life insurance are whole life and term insurance. Whole life is a policy that essentially builds cash value over time. Term life insurance is a very straightforward contract, also known as death insurance, where you pay a premium for a period of years, and in return, there's a compensation payment made upon the death of the insured. It's important to compare whole life insurance to other investments with your financial advisor and look at the net rate of return on those various investments. Trusts are a legal document that provide for management of assets by a trustee. The trustee is bound to manage assets for the benefit of the beneficiaries and is held to a fiduciary responsibility, a very high standard in the legal system. The trust will designate who receives the assets when the trust terminates and can be used to provide asset protection and financial security for spouses, children, and grandchildren. In the agricultural context, it's very important that the trustee has both the expertise and the flexibility in the trust document to manage agricultural and farm assets. Also should be noted that trusts are more complex to create and administer, as well as involving significantly increased costs to create them. A will is a legal document that provides instructions about how a person's estate will be distributed after their death. It is administered by an executor who is responsible for ensuring that the terms of the will are followed. All wills should be updated periodically as circumstances change in one's life, certainly every 5 to 10 years, or when a significant life-changing event occurs, such as a birth of a child or perhaps a death in the family. If you don't have a will, that means that your assets at death will be covered by what are known as intestacy laws. Every state has them, and these laws will determine how assets are distributed should you die without a will. They may vary somewhat from state to state, but all states have them. Coming up in the following segment, I'll identify indicators of steps taken to plan for farm succession. These are actions, documents, or arrangements that can be referenced in the ALE plan.